Natural gas has a strong Friday. Before we start, a quick word from our sponsor. This video is brought to you by XNest, the world's largest retail brokerage firm, offering ultra fast execution and no overnight fees. Find a link in the description below. Natural gas markets continue to rally rather rapidly on the 4-hour chart as we are now trying to break above the $2.75 level and essentially the previous swing high. At this point, a lot of it comes down to what's going on in Europe and whether or not the Europeans have enough supply. All things being equal, this is a market that I think will continue to be very noisy, and I think it remains a buy on the dip type of scenario. For myself, I tend to trade natural gas and currently are in an ETF, so I don't have to worry about the massive amount of leverage that perhaps a futures contract could bring. If you're a CFD trader, just make sure your position size is reasonable because cyclically speaking, this is not typically a very bullish time of year. That being said, with the lack of supply in Europe, there is a little bit more upward pressure than usual, and I think that's part of what we are seeing. In general, this is a market that I think will continue to pay attention to the $2.50 level underneath. But even if we break down below there, then I'll just buy more shares in my ETF. I have taken about half profit at this point in time. I'm just waiting to see if I get a good entry point. We certainly did have one recently, but I was afraid that we were going to go a little lower. A little hard to do this at times. The $3 level above remains a massive resistance barrier. And if we were to break above the $3 level, that could be a huge turn of events. But right now, I don't foresee that happening, at least not in the current environment. If you like the video, give me a thumbs up and subscribe.